morning, good evening, good night, or hope you're having a good lunch. Wherever you are in the world, whatever time it is, I am T. Shroom in for the Investing Bros, and today we're going to be talking a little bit about how the stock market may be affecting crypto here not too distant into the future. We're going to be breaking it all down. So let's first jump right on in, guys. I've got the S&P here. This was yesterday's trading candle. The S&P is not going to open here for another 30 minutes. But as you can see, broke down some major support and has now engulfed the bottom of this green wick. Again, this is from yesterday. And, you know, it's not really showing too many signs of stopping. If I throw on the chart prime indicator, you do see we are going to be coming into some support here. And you do have some pretty robust support here from these highs as well. But it still remains the fact that this is some serious downside for the S&P. And the stock market has been really hemorrhaging a lot of these gains, giving them all the way back from the tops back here in Wednesday and at the beginning of August, right down more than 9% as of yesterday's close. So let's dive into some of the facts here on the ground. The S&P has officially erased $4 trillion in market value since its July 27th highs. In 3 months, the S&P 500 has dropped 430 points and stands less than 1% away from correction territory, right? That would put it into a bear market. The exact top in the S&P came on the same day that the Fed removed a recession from their forecast. So recession has been a big part. That is a word that's coming back into the consciousness here of the markets. As markets fall to their lowest level since May 2023, we are in a much different environment. Last time the S&P 500 was at current levels, 3 rate cuts were priced in for 2023. Now rates are higher and futures are no longer showing rate cuts until July 2024, right? Higher for longer. These are stock prices in recession. So, this is kind of the chart that Cabesi Letter has provided here, showing that $4 trillion in market cap. That's right, $4 trillion, guys. The stock market is massive in size here in market cap. $4 trillion in market value since July 27th. So, as you can see, things are not going really well over on the TradFi space. And a lot of that has to do with this name right here. It's Google. Google's earnings they met, right? It wasn't a miss. But there were some things down in the details of their cloud offering that had stock traders sell off this name. It's now down 10%, posting its worst day since March 2020. Nearly $200 billion in market cap has been erased today alone. This is from yesterday. The 7 largest tech stocks in the S&P 500 lost more than a combined $500 billion. So this is the most widespread tech sell-off in months, which has resulted in a 5-year low for the S&P 500, as we just discussed. This is what happens when the few stocks that are holding up the entire market break. Are tech stocks beginning to price in a recession? That definitely seems to be what it is. Take a look at this chart, guys. This is bewildering here. $200 billion in lost market cap. The worst day since March 2020, which, if you remember March 2020, I won't say the words, but there was a little bit of a sickness going around and spooking markets, and there were some governments telling people that they couldn't leave their homes, right? So now is similar to then, at least in the way that the market is interpreting it. So it's not good. Well, let's jump over to the NASDAQ as well. We've got the NASDAQ here doing essentially the same thing. And, it's breaking down through this critical downtrending line of support. It's broken down, and it's also, just like the S&P, it's now engulfed that green wick from 2 days ago. This is on the daily chart here. Now, the NASDAQ doesn't have as much support. It's got support lower down. I mean, you could say there's a little bit of support here. There is, right? But the support really doesn't come in for another 3%, right? So it has a ways to go. And guys, remember, the TradFi markets are a little different. 3% is a lot. I mean, we saw right over here how much of a sell-off this is. This is $4 trillion market sell-off, and that's about 10% sell-off, right? So there's a little bit of a different valuation in the overall market caps for TradFi versus DeFi, decentralized finance, right? So what does this all mean? What does this all mean, T. Shroom? Why are you bringing up the equity markets? We're crypto guys. We love crypto. Well, here's the deal. There is a little thing called risk, and all of these assets are susceptible to risk, right? That's all that's going on here. People are taking risk with their money in expectation for a return. Well, the stock market is way less risky than crypto. It just is. It's my opinion, and it's the opinion of most folks, right? But we're seeing the stock market sell off. We're seeing the stock market sell off. Now the question is that contagion going to spread? That's why the title of today's video is the following: stock market bears looking to crypto next. That's really the question, right? Is there a possibility that this contagion of selling could come over to crypto after we've had such a nice move to the upside? Such a really, really good move to the upside for Bitcoin. Is it now Bitcoin's turn, though, to have a sell-off? Taking a look at Bitcoin's charts, it definitely has the potential to start to see a move to the downside. We see you getting overbought here down on the MVP oscillator, even getting a little bit of a bottoming candle, although that's extremely faint. I'm not even going to count that on the daily chart here. But the MACD lines are kind of disagreeing with the rest of the bearishness in the market. MACD line's just pointing straight up. But you are getting those MACD histograms, though, starting to level off there. So it does beg the question, are we going to come back down here and test at least this level of support back at 32.5? Well, I think that's more than likely going to happen, right? But then the question becomes, could this contagion that has led Google to have its worst day since 2020, is that going to spread to Bitcoin? And could Bitcoin have its worst day since 2020? I don't even know, right? That's kind of the question that we're asking here. Well, let's go ahead and take a look and flip over into crypto. We've taken a look at the Bitcoin charts here. Let's take a look into crypto and see what is something that we can learn from it. Well, the fear and greed index is screaming pretty loud here. Let's refresh it just to make sure. Look at all those PCs. And somebody knows that I'm in the market for a PC and a new iPhone. So getting a nice refresh here. You can see, still in the greed. Firmly in the greed. That's a stark contrast to what we're seeing over in the stock market, right? And the Kabesi letter said it pretty well, that the stocks that have been leading the market, the Amazon, right, Google, those stocks are now showing weakness and they're making moves to the downside. Now, I'm going to be showing you guys a couple of things to give you kind of some hope, and also give you a little insights into why I'm actually buying stocks right now. But the reality is that crypto is almost depegged from the NASDAQ, right? There's always been a pretty tight, not always, but there has been a pretty tight correlation since around the pandemic with Bitcoin and the equities markets. Well, now that seems to be gone. Right, and I think a lot of it has to do with this latest big wave of ETF news, right? Of which we haven't had many updates in quite some time. We've had this DTCC listing and then delisting, and that's about it, right? So what can we do with this? Well, let's go over to the chat, see what's being discussed here. Eric Wallen said, "So we're rushing, haha." Trade and TradFi said, or a flight to quality, like Fink said. That is exactly what I think is what we're seeing right here, a flight to quality. Now, somebody like Larry Fink is taken very, very seriously. He's seen as a market leader, right, in TradFi and even in crypto. I mean, there's a lot of folks who are holdovers from stocks, TradFi, like myself, who've come into crypto through that door whereas some people came into it for kind of the tech side. They were programmers, they really like Bitcoin, and then there's some people who came in from maybe the libertarian side. They really like the idea of a digital gold. There's some people that just came into it because they love looking at charts. They've been doing that since they were in high school. That's me, right? That's why I like. So for some people like me now, I don't have a huge heart for Larry Fink specifically, but there are a lot of people like me do, right? They think that everything that Larry Fink says is written in gold, right? So what Trade and TradFi said is a flight to quality is what Larry Fink called Bitcoin is definitely taken seriously, and I think that is kind of woven into the phenomenon that we're seeing right now. Eric Wallen said, "R.I.P. Piper's Google position." Yeah, So I have a very small Google position, but as I'm going to talk about a little bit later, I added to it today, and you're going to see why in just a few seconds. Crux of Crypto said, "Good morning, bros. Good morning, bros. Indeed." Joe Nickel said, I like to think that mega cap stocks are bleeding into Bitcoin." Yeah, well, that's what it seems. It seems like there's definitely a rotation out of equities and into crypto, at least in the last 3 days. Trading sitting on its 200-week moving average. I'm buying that little nibbler. Yes, yes. And then Piper said, "My Google position is getting ready to get added to." LOL. Well, Piper, as always, I'm right there with you. And guys, one thing you need to remember is that the best traders in the world do not trade with the market. Look what I've got on my screen right here. It says it all. It's the Fear and Greed Index. Why is there a whole website dedicated to a Fear and Greed Index? It's because that is what drives the market. It's fear and it's greed, right? And the best traders in the world are able to rise above those trends, right? Those predictable trends of fear and greed. Right now, we're in the greed on crypto. What do you do when you're in the greed? What do you do when you're in the greed? You sell, right? You take profits. Now, I'm not saying you should do that. I'm not. I'm actually not buying. I'm actually not selling any crypto right now, right? The worst regrets I've had in trading crypto is selling, right? I've very seldom regretted buying Pepe. I did regret buying Pepe, but I've never ever felt great about selling crypto afterwards, right? Now that doesn't apply to all cryptos. It's a couple degen plays I wish I hadn't bought, right? But for the most part, bigger names. And we're going to talk a little bit more about that here in just a few minutes. But I want to go ahead and jump into and kind of build off of what Trade and TradFi said. Tesla sitting on its 200-week moving average. I'm buying that little nibbler. Well, it's interesting you should say that, Trade and TradFi, because there was some big news. Bitcoin flips Tesla's market cap amid strong BTC price rally. Now, I have to thank my partner in crime, TA Tim. Tim's TA. He sent me this article this morning. I was not tracking it. I love it. He's a big fan of Finbold, or he's probably more of a fan of a news aggregator that sent him this one. I love it. Let's take a look at some of the details here. Particularly data obtained by Finbold on October 26 shows that Bitcoin commands a market cap of $677.23 billion, surpassing major selected traditional sector stocks. For instance, Bitcoin has outpaced electric vehicle manufacturer Tesla, listed on the NASDAQ as TSLA, maybe you've heard of it, which has a market cap of $675.26 billion, okay? And pharmaceutical firm Eli Lilly, great dividend stock, by the way, at $556.72 billion, okay? So you're starting to see Bitcoin start to flip some of these names. Now, what I will point out, let's look at this. I wasn't planning to swerve into this, but guys, we're just going with the flow here. Now, Bitcoin's got a little ways before it starts hitting some of the bigger names. I mean, Tesla down here at number 9. Now, one thing to keep in mind is Bitcoin has now flipped two companies in the top 10 market cap of corporations in the world, full stop, right? There's not any bigger entities outside of governments than corporations, okay? Is everybody tracking that? So Bitcoin is now more valuable by market cap than these two stocks right here, Tesla and Eli Lilly. Now, I will back up and I will say there's commodities, right, that as a market cap are worth much more than corporations. Like gold, for instance, is worth about $11 trillion. And as we can see here on the top, the largest corporation is only worth $2.6 trillion. Only $2.6 trillion. Now, Apple did achieve $3 trillion earlier this year. That was a pretty big deal. But the fact remains here is that Bitcoin is now starting to flip some of the biggest corporate names in the world. And certainly crypto as a whole, I don't know where that would stack up here on this list, but Bitcoin has a little ways to go before it's going to start being valued at 2.6 trillion. So let's keep moving here. Let me know in chat if Bitcoin has already been valued at that high. I believe in the top of the bull market, $69 per Bitcoin, it may have actually done that. Let's keep trucking though, guys, because although you are seeing Bitcoin doing really, really well right now, ticking into this greed section rather than the fear section, you are seeing a lot of bearishness in the stock markets, right? With that 9% correction to the downside on the S&P and a similar downside on the NASDAQ. The Cabesi letter pointing out this $4 trillion sell-off here in the S&P since July 27th, right? It's been a downtrend. It's been a bear trend. And at the same time, Bitcoin doing real well, right? It's obviously had some volatility here. Guys, this ain't nothing to be, shaking a stick at 18% to the downside, call it 20%, moves to the downside. You have to have time in hand if you're going to be a crypto investor or trader, right? But at the end of the day, Bitcoin up more than 100% on the year in 2023, right? One of the top performing assets for anyone, whether you're a bank, whether you're an individual trader, whether you're a family office, whatever it is, Bitcoin has outperformed, okay? And it's only going to get better. Here's my prediction is that you do not have anything to worry about, but this is my humble prediction to answer this question here of our title, stock market bears looking to crypto next. No, and here's why. The U.S. GDP grew at 4.9% annual pace in the third quarter, guys. Better than expected. Okay, this is from today. This is new data that printed just a few minutes ago here at 8:30 Eastern Standard Time. Okay, gross domestic product, a measure of all goods and services produced in the United States, rose at 4.9 annualized pace in the July through September period, up from an unrevised 2.1 pace in the second quarter. Okay, that's quite a significant increase. All right, economists surveyed by Dow Jones have been looking for a 4.7, so it beat the Dow Jones estimates of 4.7. Okay, so you can see this spike here in the GDP. Things are looking good for the U.S. economy. That just full stop. Now, some economists I read this morning were ascribing this to Beyonce and Taylor Swift concerts. Okay, they were ascribing this to the Barbie movie and the Oppenheimer, the Barbenheimer phenomenon. I'm sure you all have forgotten about that until I just brought it back up now, and you're like, yeah, that's that thing that I cared about for a little while. Well, those things, did certainly stimulate the economy. I highly question whether or not that actually had anything to do with the GDP. I'd like to see the percentage there because the United States economy is gigantic. I can't imagine that those movies and entertainment sector had really anything to do with pushing the needle on this 4.9 print for the U.S. GDP annualized. Right? That's no. That's my feedback to that is no. Maybe I would be surprised if it's more than 1% of the overall GDP. Okay, moving along here, guys. I've made my point on that one. Okay. Another reason why the bear contagion is not moving into crypto is because of this headline here. Inflation dropped markedly in September, including due to strong base case effects, and most measures of underlying inflation have continued to ease. Is this in the United States? It's not. Okay, it's in the ECB. Okay, but that's good. That's good. It's showing that, some of our closest allies in the United States, that they're starting to thaw, right? Their inflation is starting to thaw. That's good. It's moving in the right direction. By allies, I probably should have said market trading partners. Is Europe, right? So things are starting to look up in the European TradFi markets, right? So what does that mean? Well, that just means, that there's less stress on the economy, more dollars, more euros in this case could become available for purchase of risk assets, Bitcoin being one of them. Okay, so this just kind of relieving the pressure in the room, making investors a little bit more confident in the economic ground that they're standing on and that they're basing their portfolios on top of, right, may translate into more buying of risk assets. Okay. And then another print here, ECB leaves deposit facility rate at 4% at the estimated 4%. Okay, so they did not increase their rates, right? So that's good, right? So if you're not tracking, the ECB is similar. It's pretty much the same thing as the Federal Reserve for Europe. Okay, Jerome Powell, that whole deal. They've got their own Jerome Powell over there. Her name is Marie Lagarde. I think it's Marie. Might be different first name, but her last name's Lagarde, right? She did not raise the rates. Okay, so they held the rates paused. A lot of it probably has to do with that inflation, their inflation metrics. Okay, it's 9:20. We're moving along pretty well here. We've kind of discussed how crypto is unlikely to be affected by this stock market sell-off, because now we're starting to get favorable prints, right? The data is starting to flush out that no, the contagion isn't going to spread to crypto. It's actually probably going to have bullish pressure in the stock markets, right? The TradFi markets are just going to heal. And along with that healing is going to be more risk in crypto, right? That's my prediction. And it kind of goes along with what was being said in the comments with Larry Fink, right? Larry Fink plays a big role in this, which is the flight to quality. Right now, there's been a flight, clearly. $4 trillion sell-off, market cap, erased. Where did that money go? A lot of it went to the sidelines, right? Some of it went to bonds. Although the bond market, if you look at TLT, definitely shows that not a ton of it's going to bonds, right? Those yields just keep getting higher and higher. Let's take a look at the yields. Actually, that would be a good idea to do. But clearly, from similar times, let's look at where July was, right? From July, it's not like people are buying bonds in droves, right? Bond prices, the value of bonds are coming down, okay? The yields are going up, though, and the 10-year here really about to tickle. It went up above 5%, I believe, this week, okay? And it's tickling right below that, okay? So the money's going somewhere. The money from the S&P went somewhere, okay? That $4 trillion market cap went somewhere. A lot of it went to the sidelines, right? Just into cash. That's why you see the Dixie making a move higher, right? But a lot of it went into crypto. That's kind of the obvious thing here. Now, some of that's going to sell back into the stock market. The reality is just some of it's going to take some profits on Bitcoin, sell back and buy back into Google and Tesla. And folks, that's actually where I'm going to land today, because I bought some Tesla and I bought some Google, right? Take a look at these charts. This is undersold. We are the investing bros, okay? We're big fans of crypto. I'm a huge fan of crypto. I think it's the best thing since sliced bread, okay? But you can't ignore this. This is Tesla, right? This is Tesla, and it is now broken through the equilibrium here from Chart Prime, and it is in what I think pretty good support right here. Could it go lower? Absolutely. Could absolutely go lower, right? But I think this is a pretty good spot to keep nibbling on Tesla, right? And then same thing for Google, right? If you take a quite a zoom out here, you can see this is not a name that you want to be too bearish on, right? Now this could correct and start to form kind of like crab cycle, and that you would see a 35% move to the downside, more likely, probably more like a 22% in a worst case scenario, right? But ultimately, if you zoom out, this is not a name that has gone anything but up and to the right. And this is Google, right? And right now, taking a look at it on the 4-hour, you can see that it is in a pretty prime range for buying, in my opinion, right? Not financial advice. Now, this is something that could change. It could go lower, just like I said with Tesla. But I think ultimately what's going on here is it's just a repricing, right? And then when there's a repricing, what does that mean? It means things are on discount, right? For right now. This flash sale may not last long. Am I trying to get you to buy TradFi? No, I'm not. I'm not trying to get you to buy or sell anything. That's not why I'm here. I'm trying to educate you on what I'm seeing. Again, I've been trading stocks since I was in high school. I know a thing or two. I don't know everything. I'm far from an expert, far from a guru, right? But this is just, kind of trading 101. You buy low and you sell high. Okay. And I will deliver that sound effect over here. Right? You buy low, you sell high. Folks are going to be selling up here to be able to buy Tesla and Google lower. That's just the reality of it, right? All right. Now, there's also a case for this going much higher. But I don't know. We've yet to see that, right? We've yet to, and that's kind of the question mark, right? Is like, where is the next bull narrative going to come for crypto? Because right now, the bull narrative is for altcoins, right? That at least that's what I'm seeing, right? Bitcoin has big move to the upside and then trades sideways, right? Kind of crab markets here. What does that mean? Well, that means people are going to take profits on Bitcoin, and that money is going to go somewhere. Is it going to go into Ethereum? I think Ethereum is probably going to be the next rotation higher, right? And you are seeing that today. Look at this, okay? Ethereum up 1.7, Bitcoin down, right? What's that mean? Money's rotating out of Bitcoin into altcoins. Now, I wouldn't say this is alt season. It's a mini season, right? It's just like a little mini phenomenon. It's not a season. It's just a little mini market phenomenon. Cardano up 4% today. Doing really, really well. Doing nice. Rotation into altcoins. Okay. So this is kind of the pattern, kind of the momentum of the markets that I've observed. There's rotations, right? People take profits and they go and they buy things that are on discount, right? And then when those discounts come up and those assets get valued higher, they take profits and they go buy things that are on discount, right? There's a lot of other market forces, such as the GDP prints, data prints. We got a favorable print here, at least in the United States, okay? And in the ECB, they got some favorable data that their interest rate is not going to be going higher. It's going to stay at 4%, which is lower than the United States, okay? So there's things that are good. Another thing that is not good is the oil prices. Might as well go ahead and mention this. This is the oil prices. Okay, the oil prices are coming down. Did I say this is not good? This is good, unless you're an oil trader and you had a long position. Okay, seeing the oil prices come back down to $83 a barrel, that's good. That's really, really good, right? That's going to trickle down into the U.S. economy. That's putting the U.S. economy back on being able to buy oil lower, right? A more efficient economy, literally, in every sense of the term. Well, we're getting closer here to 9:30, where Army Piper is going to be going live and talking about a lot of different stuff. He's going to be going much deeper into the TA than I do. I just kind of weave all the narratives together, right, and show you all kind of what I'm thinking. Army Piper is going to be going live. He's going to be going much deeper into TA. He's a wizard with all that stuff, right? But the overall thesis here that I have is that you want to calm your mind, right? We have to calm our minds as we're moving forward in these markets, because it's just going to get more volatile from here, guys. It really is. At some point, Jerome Powell, and the CME futures are going to start to price in. They're going to start leaving hints that there's going to be a cut, right? Right now, we're thinking it's probably going to be late summer, right? But when that happens, there's going to be a lot of volatility, right? There's going to be a shock buy into risk assets. And then historically, we've seen that at some point there's a big sell-off, right? So there's going to be a lot of volatility ahead. You have to keep a calm mind through these markets. Right now, everybody's asking, should I buy more Bitcoin, right? And they're feeling emotional because they don't feel like they had enough Bitcoin, right? They have the fear of missing out. Well, here is where you have to come back and kind of go into meditation mode, because it's not the amount of money that you can make that really you should be worried about. What you should be worried about is what you own, right? And how the future is going to impact what you own. If you are invested in Bitcoin and some altcoins, then you own the seeds of the economy of the future, right? Just like investors early on in the railroads. They were trading their dollars for steel, and they were laying that steel down so that people could traverse seamlessly, right, with the least amount of friction from the East Coast to the West and to the West Coast. They were absolutely trading their dollars for things that were more valuable. In crypto, we're trading our dollars for the next set of railroads, right? The railroads that are going to lead us from where we are now in a debt-laden 120% debt to GDP ratio economy, completely addicted to debt, completely addicted to central bank lending. We're moving from that economy to the economy of the future with hard currency that tells the truth about where the economy is, tells the truth about how an asset should be valued, right? It tells the truth about what its maximum supply is, okay? The TradFi system have got us this far, and through 1971, I would argue that the TradFi system was a miracle, right? It was a true miracle of mathematics and value and valuation of assets and markets, right? But after 1971, things have gone very, very badly, right? And now there is a thing called the computer that has enabled the internet, that has enabled cryptocurrency. And there's a lot of more technological innovations along the way there, obviously, but you get the point. You have to calm your mind and remember what you're invested in, guys. You're invested in the seeds of the economy of the future. You're not just invested in something that the price is going to go up. The price is just one dimension of value. All right, I'll leave it at that. Make sure you guys go ahead and check out Army Piper. He's about to go live at the Piper Academy. Hopefully he's left a link in the chat. I'm not sure if he has or not. But guys, thank you so much for joining. And remember, you own the seeds of the future of the economy. Do you want to sell those seeds? Do you want to buy more of those seeds? Do you want to diversify into the old seeds? Maybe you do. I'm going to be doing that. I'm going to be buying some Google. I'm going to be buying some Tesla. You just got to do what makes sense to your calmest mind. And you'll be rewarded. See you at 3 p.m. We'll be going live, Eastern Standard Time, myself and Tim. Guys, have a great rest of your day.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor of the TA. Shouted out loud on the PA. T-Shrooms news, got the word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros.